So what is the first thing? You have a trial balance, opening inventory is given as 50,000, purchase are 7 lakhs, and your closing inventory is given in the adjustments as 1 lakh. Where do we write this? All adjustment items should appear twice. Trading account credit side and P&L account on the, what do we call this? Balance sheet on the asset side. Then we have seen one more variation. What is it? Closing stock is inside the trial balance. And how closing stock gets into trial balance is when it is adjusted before preparing trial balance, and we'll be adjusting it against purchases account there. So here in the first option, you wrote the entry as closing inventory account debit to trading. And in the second one, we'll be writing it as closing stock or closing inventory account debit to purchases. It will be adjusted in purchases. And when you see the trading account, you will not get closing stock in your trading account on the credit side, because it is already adjusted in your purchases on the debit side. Either ways you can do. Okay. So what is the next thing? This is important. This is something new. I don't want to show all these three items like opening stock, purchases, closing stock. I want to consolidate that into one account. So what do? I'll prepare an account called as adjusted purchase account, and in adjusted purchase account, I'll be closing all opening stock, purchases and closing stock. Okay. And when you prepare that, your adjusted purchase account looks more similar to your trading account, and only the balance will be taken to your trial balance there. And how many accounts are there in your trial balance? Only one account will be there, which is adjusted purchase, and obviously we will show that in our trading account. And don't forget to write closing stock in your balance sheet. This adjustment is done only for the purpose of trading account. It will not have any change on your balance sheet. Okay. Next, what are the concepts and conventions? I told you, like, what is the concept based on which we are writing closing stock and opening stock are matching concept. What does matching concept says? Revenue should be matched with the cost. And in order to do that, we are writing the closing stock of current year as opening stock of next year. Okay. The same thing has been given here in trading account previous year and trading account current year. Last year closing stock will be shown as opening stock of next year. And what is the convention that we are following? The valuation of closing stock is done on conservatism concept. That's why closing stock should be recorded at cost or net realizable value, whichever is lower. Okay. So conservatism says what? Always try to show underplay. That is, always understate your state of affairs. Don't show the exact position or don't overstate your position there. Okay. That's what it implies. Next, adjustments related to what we call as represented personal accounts. I don't think any revision is required. We have revised them very detailedly there. Next, we have seen what we call as non-cash expense related adjustments. So what are these non-cash expenses and non-cash incomes there? Interest on capital is a non-cash expense. And where is it adjusted? It will be adjusted in capital account of the proprietor. Next, we have done what? Interest on drawings. It is a non-cash income. It will be deducted from the capital of the proprietor. After that, we have seen hidden adjustments. So how to identify a hidden adjustment? Right, in your trial balance, before the account or after the account, they'll be giving you a percentile and a date. Okay. Now this is also done. Next, we have seen a similar kind of what do we call this thing. Now let's get on with what do we call this depreciation. Let's revise complete depreciation. So how many methods of accounting are there as far as there are methods, in the sense calculation of depreciation is done using the methods like straight line method and reducing balance method. But we are talking about accounting methods. First method, what is the first method? That is generally what do we call this? It will be there in your, it is called as charge method. What is charge method? Every year depreciation will be reduced from the asset value and balance amount will be shown in the balance sheet. Okay. And who will follow this particular method is small businesses which will have limited number of assets. They can go for it. I know a travel agent for whom I'll do the audit. Now this guy has got only 3 cars with him. So for this 3 cars, this guy will have a clarity. Okay, like how much of, when is this car purchased, what is the rate at which the car is purchased, he will have a clarity about it. Imagine like Telangana RTC is there. Can they follow the same, what do we call the charge method? They will have thousands of buses. So it will be hard for them. So when the number of assets are more, you should not go for charge method. You should go for provision method, right? First of all, let's quickly revise what depreciation is. What is the asset that you see in your balance sheet? Is there is only an asset, that is property, plant and equipment. All the tangible assets should be grouped under this group. Either it should be called as property, or it should be plant, or it should be equipment. Okay. So what is the value is 5 lakhs, and what is given in your adjustments? Provide depreciation on property, plant and equipment at the rate of 10%. So since it is given in adjustment, what is the rule? Amount should appear twice. So where is it I'm writing? What are the entries that I'm writing? First, I will create a expense account or non-cash expense account called as depreciation here. Okay. And it will be charged on your asset to property, plant and equipment there. Next, when you are calling depreciation, obviously it should be closed in your profit and loss account. So here we'll be writing it as profit and loss account debit to depreciation account. So how do we show that? Look at the profit and loss account here. Profit and loss account, debit side to depreciation, and focus on the balance sheet. What is it you have written? Property, plant and equipment 5 lakhs less depreciation 50,000. Outer column will write it as 4 lakhs 50,000. So every year your asset will keep on decreasing in value. Okay. And who can follow this? I think I told you, only small businesses which will have limited number of assets. Okay, they can do it. Now, depreciation charge method, but the depreciation is calculated before preparation of what we call as trial balance. What is that we will do? Same entry, depreciation account debit to property, plant and equipment, but what is the account that you're having extra in your trial balance when compared to the previous option is, in the previous option you had only one asset, that was property, plant and equipment account was there, but now you will also have depreciation, because look at the value of property, plant and equipment. What was the value in the previous one? 5 lakhs, but now it is appearing at 4,50,000. Why? Because already we have adjusted or we have reduced that depreciation. That's why depreciation is shown at 50,000. Now, where is that we will write? Obviously, trial balance items will come only once. So I'll be writing it as profit and loss account debit side to depreciation. And in balance sheet, property, plant and equipment, 4,50,000. Okay. Next up, provision method. Focus on this. Practically, what is followed in the real life scenario is provision method is followed. Okay. What is this provision method? Yesterday I told you two conditions are to be satisfied under provision method. First thing is depreciation should be provided. Condition number two is asset value should not change. These are the two principal rules of provisioning method. Okay. So same example. What is the asset value that you are having here? Property, plant and equipment 5 lakhs. In adjustments they are saying that provision for depreciation on property, plant and equipment at the rate of 10% per annum shall be maintained. In the previous one they are asking you to charge the depreciation and reduce the depreciation, but here they are saying that accumulate the depreciation in an account called as provision for depreciation. So what are the accounting? Focus on the entries. Once you get the entries difference, you'll get the concept. Depreciation account debit, we created an account called as depreciation now, which is a non-cash expense account. But in the previous one, charge method, you wrote the credit account as what? What was the account there? Property, plant and equipment. Why? Because under charge method, every year the depreciation will be reduced from your asset. But here, depreciation will not be charged or depreciation will not be deducted from the asset value. It will be kept in a separate account called as provision for depreciation. Am I being clear? This is the first difference that you have to notice. Now, let me write that. This is difference number one, which you have to observe. Second one, profit and loss account debit to depreciation. Just now we have opened an account called as depreciation, which is a nominal account, which is a loss account. Let's go with it as loss. Actually, it is not loss. It is 50,000 should be seen as the benefit derived by the business. Example, CMS has provided this benches here. Imagine like these benches are new benches. After 1 year, we'll be calculating depreciation on them, right? Now, what is the meaning of how you see that is at foundation level, even we teach it as like there is a decrease in the value of the asset. Now, can you measure that decrease in the value, intrinsic value with 100% precision? Why? I'll tell you. See, imagine like last two rows are not at all occupied. Let's say. Okay. Now, if last two rows are not at all occupied, will they have any depreciation? Obviously. So, depreciation is only an estimation that you are doing, that this is the benefit that is derived by the business there. Am I being clear? Right? And are we paying this money to anyone? Like salaries are paid to employees, rent is paid to the owner, interest on loan is paid to a bank. Are we paying this depreciation to anyone? So what is the concept behind this is, imagine like, depreciation is an amount which is set aside. 50,000, will it be what we called as paid to anyone? No. What is the responsibility of the business is, every year take out that 50,000 from your profit and keep that in a separate bank account or put that in an investment. And imagine like this asset, what is the value of property, plant and equipment that you are using? 5 lakhs. Imagine like straight line method, 10 years. After 10 years, this asset will become zero, right? Now, once it becomes zero, if you have to continue your business, again, you have to buy the asset. You have to buy, imagine like this, whatever problem that you're looking at, this guy is a Xerox shop guy. He purchased two Xerox machines. Each Xerox machine's value is 2 lakhs 50,000. So what is the total value? 5 lakhs. These machines will give him service for only 5 years. After 5 years, he has to sell them off and buy new machines if he is thinking of continuing the business there. Okay, let's say our Maitrivanam area and all that, small shop with two Xerox machines. Now, what is this depreciation is, every year out of profits, take out 50,000, okay, and keep that in a separate bank account. After 5 years, once the machines are completely out of order, you sell them off or you sell them off in a scrap and buy new machines. Now, imagine like again you need 5 lakhs. So, if you don't accumulate this money by taking it as depreciation, you have to bring that money as capital again. Got the clarity? So what is that I'm doing is, every year I'm setting aside this 50,000 in a separate account. Once this asset, two Xerox machines are out of order, I will sell them off and I will buy new machines. And from where did I generate this money for purchase of new machines is, every year out of profits I'm taking out amount and I'm keeping it separately as depreciation there. Am I being clear? Right? So let's understand provision method. What is the first thing that we have to observe? Depreciation has to be provided, but depreciation should not decrease your asset value. So for that, what is it I'm doing? Instead of crediting property, plant and equipment, I'll credit provision for depreciation account, and then I will close depreciation in my P&L. Second entry is common in charge method as well as your provision method. Now, P&L account, what is that we are writing? To depreciation, 50,000. Now look at the balance sheet. Second difference that you have to notice is your balance sheet. What is that you're writing on the asset side there? Property, plant and equipment is appearing at what value? 5 lakhs. In the previous options, charge method, you were deducting that 50,000 and you were writing it as 4 lakh 50,000 in the outer column. But here, under this method, asset will always continue at its historical cost only. First day when you have recorded the asset, it will be at 5 lakhs. Last day, that is 10th year last day, again it will remain at 5 lakhs only. And where is the depreciation getting accumulated? Depreciation is getting accumulated in a separate account on the balance sheet liability side. First year 50,000. Second year again I'll add 50,000. It will be 1 lakh. Third year one more 50,000. 1 lakh. By 10th year it will become 5. Am I being clear? This is the basic idea of what we call as your provisioning, or what we call as depreciation there. Am I being clear? Now, what is the advantage, sir? What is the advantage is, you will have a clarity that at what cost did I buy the asset? And if you look at the liability side, you will have how much depreciation is already provided, and minus these two, asset value minus your depreciation provision, you will get the balance of the asset, that is WDV of the asset, or written down value of the asset. And this is the advantage. Did you get the clarity? And who practically 99% of the businesses will follow provisioning method only. You will not find charge method. Very small businesses, they will follow charge method. I told you, like Xerox shop fellows and all that, these people will do. Okay. Next, provisioning. If I do the same provision, that is provision for depreciation is done before trial balance is prepared, what is that I will have? Entry will be the same. Depreciation account debit to provision for depreciation. But look at your trial balance. In the previous trial balance, how many accounts were there? Previous one. Only one. Why? Because provision is created after trial balance preparation. But here, look at the thing. Property, plant and equipment, full value, 5 lakhs, no change in that. Debit side, we are getting an account called as depreciation. Credit side, you are getting a provision for depreciation. And obviously, we know where to write them because trial balance item should be recorded only once, right? Where do I write? Property, plant and equipment, balance sheet asset side. Depreciation will go into your P&L account. Provision for depreciation will come and sit in your balance sheet liability side. This is the provision. In this we'll have complexities like you'll have asset disposal thing and all that we will do while doing problems. Only depreciation chapter when we do, we'll do that. Is this clear, sir? Now you were having some doubt here, this particular, is that clarified now? Right, let's get on with the new thing. What is it? I think, did we do this? We completed no abnormal loss. I think we need to start it, right? What is this abnormal loss? What is abnormal loss is usually this loss should not occur, but if a loss occurs because of your negligence or because of some accident, it will be called as abnormal loss. Or in layman language, abnormal loss is a avoidable loss. That is, if you would have taken reasonable care, you would have avoided this loss. That is called as abnormal loss. Now, what is normal losses? Normal loss is unavoidable. That is, no matter how much care you take, that losses cannot be stopped. Okay. So, what are normal losses are? Evaporation, okay, leakage, all these things, they are unavoidable. No matter how much care you take, still some sort of loss will happen. I'll give you an example. And moreover, sometimes they treat normal loss as essential. That is, loss is required. Okay. Only when normal loss occurs, your product will get its what do we call as quality. Example I'll give you. Now, you know this red chili, right? You know what red chilies are? Right. So imagine like there is a company called as MTR, okay, which sells what we call as this spices, masala powders, and all that. Okay, so these people they'll go to a village called as Guntur here, not Amaravati or in Andhra Pradesh, the capital of Andhra Pradesh. It is famous Guntur area. That area is famous for what we call as red chili. Okay, but there is a big market yard there, biggest market yard in Asia. So this MTR people they will go and buy what we call as red chili. Let's say they bought 1,000 kgs of red chili there. So they will bring that red chili to Hyderabad, what we call as grinding unit. They will put that entire red chili from bags and they'll grind the powder. Now what is that they will do? Dry them first of all. What is the problem? Moisture. If any moisture is there in that red chili and if you grind it, your entire powder, whatever is the red chili powder will get what we call as fungus. So that wetness should not be there. So they will dry it out. So you purchase 1,000 kgs there. You brought them to Hyderabad and you have dried it in the hot sun there. Or they use sophisticated dryers. Electronic devices will be there. They will dry them out. So after drying, 100 kgs weight loss is there. So I brought 1,000 kgs, but when I dried them out, they came to 900. So is this avoidable? No, it is essential. It is required. After that, can I put the same complete dried out 900 kgs chili into a grinder and make powder out of it? No. This red chili will have twigs to it. They'll remove the twig. Another 50 kgs is gone. So 1,000 purchased, 100 evaporation. Whatever 50 kgs is there, that is wastage. It should not go into the powder. 850 kgs. Now, after removing twigs, can I put that into the what do we call this grinder now? No. What? They will break it into what do we call this two pieces and remove the seeds from inside. Why? Seeds will be white in color and they'll damage the color of the powder. So they'll remove the seeds. Another 200 kgs is gone. Now, how much is left out is 800 kgs is left out, 1000 brought to Hyderabad. After drying, 100 is gone. Normal loss. Can you stop it? Is no, it is required because the quality, the powder, if it has to stay for 1 year, I have to do it. I have to bear that loss. Then I remove the twigs, then I remove the seeds. So 1000 to 800. So that 200, whatever is there, it is normal loss or it is essential so that you will get a good quality 800 kgs of powder which can be packed and sold. And if you do this activity, the powder will stay for 1 year. It can be used for 1 year. Okay, so that is normal loss which cannot be avoided or which is required for the processing of the product. Now, what are abnormal losses are? These are like, accidents, never expected things. Fire accidents will happen, or something like accidentally something falls on the stock on the whatever we call this thing. So you never anticipate them. Some sort of accident will happen. And tell me one thing. Insurance companies will give you insurance for abnormal losses or normal losses. Only abnormal losses. Insurance companies will not give you insurance for normal losses. Why? We know that they are essential, they are required actually. So when it is unavoidable, can you insure that? No. Okay, so what are insured are abnormal losses are insured. Now let's see the thing here. So what is the story here? How much of loss has occurred? 1 lakh worth of stock was destroyed due to a fire accident and full claim is received. So, how much stock is damaged? 1 lakh. What is the reason for damage? Fire accident. And how much claim did you receive? Full claim. Why? Because imagine like this is a godown. You have put some stock here, and because of some electrical installation failure, it triggered some sparks and it destroyed the stock. And on investigation, it was very clearly visible in a CC camera that there was a flame or there were sparks which have come out from an electrical installation. That's why accident has occurred. Now, is it because of your gross negligence? No, it is an accident, right? So insurance company gave you full amount, or they said that they will give you full amount, right? Now let's do the accounting here. What is the first account that I'm creating here is abnormal loss account has to be created. And what is the rule there? Debit all expenses and losses. So I created a abnormal loss account, and this abnormal loss will be created from an account called as trading account. So we'll be writing it in your, what do we call this, trading account on the credit side. Now, when do I write it in trading account is when the accident occurs 1 day before or 2 days before your financial year. We are already in March. Today it is 22nd. 22nd or 21st? 22nd was festival, right? 22nd. So imagine like on 29th March or 30th March, this accident has occurred. Then I can wait for 2 days and write that in my trading account that I'll be preparing on 31st. Am I being clear? Now, if the same accident occurs in the middle of the year, let's say in July or August or September, then will you prepare trading account? Because you'll be preparing trading account only on 31st March. 1 or 2 days is fine. But if it is happening anywhere before, imagine like first week of March, I can't wait for what we call as 20-25 days. There I will write as abnormal loss account debit to purchases account. Am I being clear? So the first account that is created is your abnormal loss account. It will be created from trading account if it is happening at the end of the financial year. If it happens in the middle of the financial year, the same thing will be routed through an account called as purchases account. This first point, is it clear? Next up, look at the second one. I have taken an example that the insurance is taken from a company called as Tata AIG. There is a general insurance company which is run by Tata Group, which is called as Tata AIG, or we'll be writing it as bank. Now, why are we having two options there? If the claim is received, I'll write the entry as bank account debit to abnormal loss. If the claim is admitted, they are saying that the claim has been admitted but it is not received, then I will write it as Tata AIG account, or I can write it as insurance claim account also. Either ways you can write. And what is the thing? I opened a abnormal loss account and I have closed it. Where did I close it? By writing it as Tata AIG account or bank account. Entries, are they clear? Okay, when do we write it as Tata AIG or insurance claim is admitted but it is not received by your business yet. Then I will write the company name. If you don't want to write the company name, you can write it as insurance claim account, or you can write it as bank account if it is already received by you. First one, is it clear? And where do we write it? This is a two-way adjustment. Look at your trading account credit side by abnormal loss. If I post the first entry, we'll get it as by abnormal loss. Nothing will go into your profit and loss account. Why? Did you sustain any loss because of this accident? No, we got the full amount from the insurance company. So where do I write the balance amount 1 lakh there? Non-current assets will be showing it as, it should be current asset, not non-current asset. Tata AIG account or bank account will be shown in your balance sheet on the asset side. This is case 1. All of you are okay with it? We'll go back to this once we are done with all the 3 cases. What is case 2? Read case 2. 1 lakh worth of stock was destroyed due to fire accident and no claim is received. What is this thing is, accident has occurred and the accident is caused because of negligence of this particular person there. There was a fire accident in the Godown and this guy, he left something open or something was not attended. Okay. Because of that reason, there was a damage of 1 lakh. Look at the first entry. What is the first entry? Abnormal loss account debit to trading. This is unavoidable. First entry is common in all scenarios. Okay. So what is that? Why did I write the first entry? I created an account called as abnormal loss account, debit all expenses and losses, and I am creating it from an account called as trading account. After that, look at the next entry. Abnormal loss account is closed in an account called as profit and loss account. Why? Did you receive any insurance claim from the insurance company? Not even a single rupee has come. So what is that? I will treat it as complete loss. And how to disclose it? Trading account credit side by abnormal loss 1 lakh. P&L account debit side, I will close the account as 2 abnormal loss 1 lakh. Why did I write that in trading account? Is to reduce the stock level. And why did I write that in P&L account? Is to show that the entire 1 lakh is gone now and we will not have a chance of recovering it. Am I being clear? Right? Look at the third scenario, very important one. Focus on this. Okay. Now, what is scenario 3 here? Part of claim received from insurance company, which is partial loss. Okay. Look at the example there. 1 lakh worth of stock was destroyed due to fire accident and insurance company admits 60% of the claim and balance was rejected. So out of 1 lakh, if 60% is admitted by the insurance company as claim, how much will you receive from the insurance company? 60,000 will come. Balance 40 is loss. Now, this is a three-way adjustment. Why is it called as three-way adjustment? Is first thing is abnormal loss account debit to trading account. This is the common entry in all the 3 scenarios. Full loss, no loss and partial loss. Whatever that 1 lakh is there, it is called as gross abnormal loss. That is, what is the actual stock that is destroyed in the fire accident. Okay. Next, to look at the second question, a second entry, profit and loss account 40,000, Tata IG or bank account with a net claim of 60,000 and 2 abnormal loss account 1 lakh. So in the second entry, I am closing abnormal loss account, but I'm splitting that abnormal loss account into 2 things. What is the loss that you have sustained will be debited to your profit and loss account. And whatever claim is received or receivable will be debited to Tata AIG account or bank account. And abnormal loss account is closed. The second entry's idea is basically to close the account called as abnormal loss account. Did you get the clarity? Now look at the thing. Where do we write? Trading account, credit side. How much did you write? 1 lakh. Why? Because it is abnormal loss account is created from there. Okay. P&L account, 2 abnormal loss. How much are we closing here? 40,000. Out of that, gross abnormal loss of 1 lakh, net loss is only 40,000. And look at your balance sheet again. I'll be writing it as Tata AIG account or bank account. What is the value? 60,000. Did you get the clarity? So three-way. Trading account, full loss will be shown. That is actual loss will be shown. P&L account will show the net amount of loss actually happening after receiving the insurance claim. And the third one is how much if insurance claim is, if it is received, bank. If it is not received, Tata AIG account, or you can also write Tata AIG as insurance claim there. Am I being clear with the three options? So go back to first option. What is the first option here? There is no loss at all. Why? Because it is not your mistake. It is because of someone's mistake. Though you were careful, still the accident has occurred. That's why insurance company is giving you what we call as full amount. That's why we are writing that in trading account credit side, and again in balance sheet on the asset side. Nothing will go into your P&L account because we are not getting any sort of loss because of this accident. Second one, full loss, no claim is received. So what is that we are doing? 1 lakh, entire 1 lakh is gone. Trading account credit side, P&L account debit side. Nothing will go into your balance sheet. And third case scenario is part of it is loss and part is admitted as claim. So there will be a entry in all three. Entry in trading account will be there, P&L account will be there, and balance sheet will be there. Is this clear? This is your second, what do we call this? Adjustment related to abnormal losses. Three scenarios: full loss, no loss, partially lost, and partially admitted as claim. Now let's get on with the what do we call this next adjustment. Bad debts. Focus on this particular what do we call this bad debts thing. Okay, because now I divided bad debts into three scenarios. Provision for doubtful debts into three scenarios. Don't use the wording as provision for bad debts, because if it is bad debt, why do you need a provision? Okay, so always use the wording as provision for doubtful debts, and don't use the word as reserve for doubtful debts, or they will use it as reserve for bad debts. Yesterday I think we have discussed very clearly what is provision and what is reserve. Okay, so bad debts, what is the story here? Now what do you see? Case 1, bad debts given only in trial balance. What are the accounts that you see in your trial balance here? Trade receivables and bad debts. What is the trade receivables value that you're having? 9,50,000, and bad debts are 50,000, which means that before preparation of trial balance, this guy, he sold total, what are the total sales that are done by him on credit are 10 lakhs. Out of 10 lakhs, before preparation of trial balance only, he has received a shock. What is a shock? One of the customer is declared as insolvent, or one of the customer is missing, or customer is not in a position to pay the money. Whatever the reason is, for accounting, we don't need the reason. We want the accounting to be done. So how much money is already lost in the form of bad debts there? 50,000 is gone. And when did this thing got confirmed? This thing got confirmed before trial balance is prepared. That's why from where did we create that bad debts account? Always remember the bottom line. Bad debts account is created from trade receivables account. Okay. So I have written the entry bad debts account debit to trade receivables before trial balance. That's why my trade receivables are reduced from 10 lakhs to 9,50,000, and bad debts are appearing at what do we call this 50,000 there. Okay. Next. Right. So note what is the information adjustments. Do you see anything in the adjustments? Did you get the clarity? Original credit sales were 10 lakhs, but before preparing trial balance itself, one of the customer, he was declared as insolvent by a competent court, and I got the clarity that I will never get that money 50,000. So when you are 100% sure that you will not get the money, I have to write that as bad debts, and I wrote the entry as bad debts account debit to trade receivables. No information is there regarding bad debts in your adjustment anywhere, this part, which means that bad debts are there only in your trial balance. And what is that we will do, and where is that we will write? Look at the note here. If bad debts appear only in trial balance, it means that amount of bad debts have been deducted from the trade receivables already. So debit bad debts and credit trade receivables. Instead of writing an entry, I wrote it in a sentence form. Okay. Profit and loss account, debit side, I will show it as what? Two bad debts, because it is a loss to me. And in balance sheet under current assets, I'll be showing trade receivables as 9,50,000. All of you are okay with this? Right. Now we will improve it gradually so that you will have a better clarity. That's why I've divided the provision and bad debts into two. Total 6 scenarios are there. First scenario, is it clear? Okay. Next one. Bad debts given only in adjustments. In the previous one, the bad debts were there inside your trial balance. But now, bad debts will be there in adjustments. Now, when will you get bad debts in adjustments? What is the timeline? Yes. You prepared the trial balance. After preparing trial balance, you got the information that 50,000 will not come. And did you had this clarity before prepare trialing balance? Like, no. So, trade receivables is appearing at a full value there, 10 lakhs. But now, after preparing that trial balance, you got the clarity that 50,000 will not come. So, what is it I will do? I will not tear off that trial balance, throw it out. I will adjust that amount in my final accounts. Okay. So, what is the note? If bad debts appear only in adjustments, it means that the amount of bad debts is not deducted from trade receivables. So now we will debit what we call as bad debts and credit trade receivables after trial balance is prepared. Now look at the thing, P&L account. Do you see any difference between P&L account in the previous case and the current case? Previous one, what did you write? Here, two bad debts. Do you see any difference here? No, nothing. This is common in both the what do we call the situations. Now, what is deviating? Look at your balance sheet presentation. Trade receivables from trial balance. How much of trade receivables are there in your trial balance there? 10 lakhs there. 10 lakhs will be shown very clearly minus bad debts. Why? Because these bad debts are not deducted yet. And what is the basic rule that we are following? Trial balance items once and adjustment items twice. I wrote it once already in my profit and loss account debit side. Now I will deduct it from what we call this balance sheet asset side. Less bad debts 50,000. Outer column I'll write as 9,50,000. All of you are okay with this second scenario? Now let's combine 1 and 2. Read the scenario and then we will discuss. Okay. Now, trial balance is prepared already. How many accounts do you see in your trial balance? 2 accounts are there. What are the accounts? Trade receivables 9,50,000 and bad debts 50,000, which means that before preparing trial balance itself, your business has sustained a loss of bad debts to the extent of 50,000. Look at the adjustments here. Additional bad debts are to be provided for 20,000. Now, what is the timing difference here is bad debts that are there in your trial balance are already confirmed before you prepared your trial balance. Okay. Now, after preparing trial balance, when you are getting ready to prepare a trading P&L account and balance sheet, suddenly you got another information that out of that 9,50,000, another 20,000 will not come now. Am I being correct? 50,000 is already gone. Originally 10 lakhs, 50 is gone. That's why we wrote 50,000 in the trial balance there. After preparing trial balance, look at the adjustment. What is the adjustment that we have got here? Additional bad debts, right, are to be provided for 20,000. Look at the note there. If bad debts appear in trial balance and adjustments, it means that the amount of bad debts given in the adjustments got confirmed after preparation of trial balance and are not adjusted in the trade receivable shown in the trial balance. Hence, in balance sheet, we have to deduct only adjustment bad debts. So look at your profit and loss account. Now there is a change. Two bad debts, 50,000. From where did you bring that 50,000? Trial balance. And to that, add additional bad debts of 20,000 given in the adjustment. Outer column will show a total of 70,000 rupees as bad debts. Now, look at your balance sheet there. Trade receivables is taken as how much? 9 lakhs 50,000. From where did we bring this 9 lakhs 50,000? Trial balance. Less bad debts. Which bad debts? Adjustment bad debts. Why? Because trial balance bad debts are already adjusted. Only then we got the trade receivables as 9 lakh 50,000. But did you adjust this 20,000? No. So now we are adjusting that 20. So, and again, you don't have to know the entire concept. Trial balance items once, adjustment items twice. Already we wrote this additional bad debts just now. This is the first time. This is one. Again, I have to show. Where is that I'm showing? Second time in my balance sheet on the asset side as a deduction from your trade receivables. So outer column, what is the amount there? 9 lakhs 30,000. Okay. All three scenarios are clear. Okay. I'll put it on display again. Go through the entire thing word by word. Okay. This is important because if you have to understand provision for depreciation, a provision for doubtful debts, you should be clear with this first three scenarios there. Bad debts part, if it is clear, then you can concentrate on provision for doubtful debts there. Just read the entire thing and understand. Okay. Timing is important. What is the timing that you should understand is it done before trial balance or is it done after trial balance? If you understand that thing, final accounts, you can solve any problem on final accounts. First scenario, is it clear? Go to the second one. This is important. This scenario is important. Okay. Bad debts before trial balance, bad debts after trial balance. Okay. Now I hope these three are clear. Now, now what are these bad debts are? When you have 100% clarity, you got a confirmation, and the confirmation is so solid that you got the clarity that you will not get this money. Then I will write it as bad debts. Okay. But there will be a scenario which is called as doubtful debts. Previous one was bad debts which are 100% confirmed and there is no way that you will get this money. Why? Imagine like the customer to whom you sold the goods on credit, this guy is declared as a insolvent person by a court. Now once court declares a person as insolvent, can I go and ask him money? You should not go and ask him money, or else he will file some case on you saying that you are harassing him. Okay. Now when do we go for this provision for doubtful debts? Is I sold goods to my customer on credit, but I got the information not from the customer, from some outside sources saying that this customer's financial position is not good and he may not pay you money. May not. It is only a doubt and it is not a confirmation. If it is confirmation, we'll write as bad debts only. So, provision for doubtful debts. This particular concept, the idea behind provision for doubtful debts is driven from a convention called as conservatism. What is conservatism? I think already we have seen conservatism somewhere. And I have asked you in this very PDF, we discussed about conservatism somewhere. In this PDF, what we are discussing, we have already discussed about conservatism somewhere in an adjustment. Depreciation. Closing stock. Noted clearly, sir. Conservatism, valuation of stock. What does it say? Whichever one is lower out of cost or net realizable value or market value should be taken as the closing stock value. The same convention of conservatism drives the concept of your provision for doubtful debts. Okay, let's understand this. Now, what does conservatism say? It says that provide for all known losses and never anticipate any income or gain. Conservatism says provide for, that is, write an entry, provide for all known losses. What is the meaning of known losses? If you have a doubt that you will get a loss, and what is the probability of getting that loss is 0.01 percentage. What is this 0.01 percentage is? Technically, it is impossible that it will happen. But even if you have the doubt that there will be a loss because of bad debts and the probability is 0.01 percentage, it says that write it as an anticipated loss in your books of accounts. Got the clarity? So what is this 0.01 percentage? If it is 100 percentage confirmed, then we will call it as what? We call it as bad debts, isn't it? But if you are strictly going with conservatism, it says that 0.01% doubt is there. Only a question mark in your mind that you will get a loss. It says that go and write the entry. And for what you should do that? You should do that for losses, not for gains and not for incomes. Okay, which means that 99.99% you're sure that you will not get a loss. But what is the possibility of getting loss is infinitesimal, 0.01 percentage. Don't take risk. That's what conservatism says. So based on this, what is it I'm doing is, when I have a doubt and the doubt is 0.01 percentage, I'll write an entry in my books of accounts, not for loss, but for anticipated loss. That is, you're writing a journal entry expecting that you will get a loss. Okay. And provision is created from where? Provision is usually created from profit and loss account. Okay. Practically at your level, it is not required, but I'm telling you out of proactive thing. Provisions are always created from P&L account. Reserves are always created from P&L appropriation account. First rule that you have to keep in mind is provision is something that is created from profit and loss account. And reserve is something that is created from P&L appropriation account. Yesterday we have very clearly discussed what is provision and what is reserve. Provision is whenever you have a doubt that you will incur a loss and you don't know what is the amount of loss that you will incur, then we will create a provision. Now let's understand this. Enough of discussion of concept there. So did you get the clarity? So anticipated loss, it is not a loss, it is anticipated. Then we provide that. How much of trade receivables do you have? Trial balance 10 lakhs, 10 lakhs. Even in the previous example, we have taken it as 10 lakhs. Now, what is that? Provision for doubtful debts 25,000. You created a provision. What is the meaning of this is, out of that 10 lakhs, I have a doubt that I will not get 25,000. Got the clarity? And this provision will be created from profit and loss account. Look at the notes there. No information regarding the provision for outflows is given in the adjustments. So if provision appears only in trial balance, it means that the business was expecting that the loss due to bad debts in near future. If provision has been created in the middle of the financial year, profit and loss suspense account has to be used for creating provision for doubtful debts. This P&L suspense account is not covered in your syllabus. Don't worry about your foundation level syllabus. Okay, this is meant for, this is common for CMA Inter and for you. I use the same common thing so that everyone will have the same standard. Okay, so provision is created. What is the 25,000 credit side that you are anticipating as? It is a anticipated loss, and I wrote it on my trial balance and I created this well in advance. Okay, imagine you had this doubt of 25,000, but eventually your customers, they gave you full amount. Okay, then what is it I will do? Take that 25,000 provision created and close it in your profit and loss account, and then take the trade receivables and write them in your, what do we call, imagine like I had a doubt, subsequently at the time of preparation of final accounts this doubt is clarified and I have confidence that I will get the money from my customer. Then what is it I will do? Close the provision in your P&L account credit side. Okay, so what is the meaning of this 25,000 is you were anticipating 25,000 loss, but nothing was lost. You got the entire 10 lakhs, or you are confident that you will get entire 10 lakhs. Am I being clear with the first option here? Arthamainda. Second option. When is the provision created, or when is the provision given to you? Provision is given in your adjustments. What is the trade receivables value that is seen in your trial balance is same 10 lakhs. Do you see any provision there? No. Why? Because you never had any doubt that you will get a loss at the time of preparation of trial balance. Now, where did you create the provision? Provision is given in your adjustment. So what is that we will do? Create a provision. So do you have a provision account in your trial balance? No. But you are creating it after preparing trial balance. And from where do we create provisions? Just now I told you, provisions are always created from P&L account. Reserves are created from P&L appropriation account. Create a provision for debts at 2.5 percentage on the trade receivables. So what is 2.5 percentage on your 10 lakhs? 20, 25,000, the same amount. Provision is created after trial balance. The doubtful debts are anticipated after. I think the text is missed out. So how do I show this in my profit and loss account? Now, what is the entry that I wrote just now? I wrote the entry as profit and loss account debit to provision for doubtful debts. I created a provision for 25,000. So I will write that in profit and loss account debit side to provision for doubtful debts account. What is this? Anticipated after preparation of trial balance. What was the previous one? You had this doubt before you prepared trial balance, and at the time of preparation of your final accounts the doubt got clarified and there is no question that you will get any loss. Then we have closed it in P&L account on the credit side. Now you created the provision just now, and this provision is created from P&L account from the debit side to provision for all debts 25. And what is that I'm doing it in my balance sheet here? Trade receivables 10 lakhs minus 25,000. Now why are we deducting this 25,000 is, what is the basic rule that we follow? Trial balance item once and adjustments are to be shown twice, right? Just now I wrote that 25,000 first time in my P&L account, and then I have a doubt that I may not get 25. So what are the confirmed debtors are only 9 lakhs 75,000. Got the clarity? Always remember, keep the basic rule in your head. Trial balance items once, adjustment items twice. Mandatory. Okay, so out of 10 lakhs, now when did you get this doubt? Is after preparation of trial balance you got a doubt, and this doubt is not confirmed yet. So still we are having a doubt on 31st March that whether I will get that 25,000 or not. That's why we are deducting it and showing it as 9 lakhs 75,000. Previous one was Doubt was there before trial balance, but the doubt got clarified after preparation of trial balance, and I will get my full amount. 10 lakhs will come, no doubt about that, 25,000. This scenario was, you are having 10 lakhs debtors, but you got a doubt after preparing trial balance. So create a provision from P&L account and deduct it from your trade receivables. This is confirmed after preparation of trial balance, right? Now, all of you are clear with this? Focus on the next one. Provision is there inside your trial balance, and they are asking you to create or extend the provision in adjustments. That is two places. Provision is there in trial balance, provision is given in your adjustments there. So what is the thing that you are doing? Trade receivables, how much is it? 9 lakhs 50,000. Provision for doubtful debts is given as 25,000. So when did you create this? Before preparing trial balance. Or did you get the clarity? Okay. What was the doubt that you were having that you will get as a loss there before trial balance? What is the amount? 25. Look at your adjustment. New provision for doubtful debts shall be maintained at 40,000, which means that you had a doubt that you will not get 25. But after preparation of trial balance, your doubt got increased from 25,000 to 40,000. There is an enhancement of 15,000. All of you are okay with that? Now, how do I show? This will change, okay? This is our, what do we call as intermediate level. That is +1, +2. They will say that for ease of your understanding, because you guys will be too young to understand at that time. What is that they will say? Take the old provision from your trial balance and write it in your P&L account on the credit side. And whatever new provision is there, you write it on the debit side. And in your balance sheet, what is that you are doing? Trade receivables 9,50,000 less provision for doubtful debts. Which provision? New provision. Why? The basic rule, adjustments twice. So I wrote it once in my P&L account, and again I'm removing 40. Now you guys see that 40 as a separate number. How do I see that? Is 25 plus 15. 25, whatever doubt I had, I closed it. Where did I close it? P&L account. What is a new doubt now is 40,000. That I am adjusting it at both the places. Is that clear? Now, here in this, your opening provision was 25 and closing provision was 40. Provision got increased. Doubt got increased. Scenario 3B. What is your trade receivables balance? Same 9,50,000. Provision for doubtful debts anticipated at the time of what we call as before trial balance was 25,000. New provision for doubtful debts shall be maintained at 15,000. So what is this scenario, and what is it, the difference between the previous one and this one? Previous scenario anticipated before trial balance was 25. Eventually, after preparation of trial balance, they got increased from 25 to 40. Here, anticipated before trial balance is 25, but after preparation of trial balance, the anticipation got decreased by 10,000. Now we have a doubt of only 15,000. Two scenarios. What do I do? Same story. Old provision P&L account credit side, new provision debit side. And new provision should appear twice, right? What is the latest doubt that you are having? Is it 25 or 15? 15. We'll write the latest doubt only. 9 lakhs 35,000. Okay. Now, look at the thing. What is it? What is the scenario that you're looking at? Now we are already, guys, have done 3 scenarios of bad debts. What are the 3 scenarios of bad debts? Bad debts given in trial balance, bad debts given in adjustments, bad debts given in your trial balance and adjustment. 3. Provision inside the trial balance, provision given as adjustment, provision inside and outside or adjustments. And we have seen 2 scenarios, provision increasing, provision decreasing. Now let's see a hybrid scenario. This, even if you are not clear with all the 6 scenarios that we have done just now, if you understand this scenario, it is more than enough. Why? Because it is a combination of all 6 scenarios. Trade receivables is how much? 9,50,000. What is the second account that you see? Which means that already you have sustained a loss of 1 lakh before preparation of trial balance. And so technically, are you trying to say that if these bad debts were not there, I would have got my trade receivable balance as 10 lakhs 50,000, but I got a confirmed loss of 1 lakh already. Provision for doubtful debts, which means that after getting a shock of 1 lakh, that is a bad debts which got confirmed before preparation of trial balance, I was still having a doubt that I may not receive 25,000 out of that. Let's reiterate that from the beginning. Focus on that. Even if you have not understood the previous 6 scenarios, if you understand this one and next one, story is closed. Trade receivables balance is 9,50,000. Immediately I see an account called as bad debts, which means that this 1 lakh loss got confirmed before preparation of trial balance. Correct? So already you have a shock called as 1 lakh. So balance 950 is sitting there, and suddenly you realize that another 25,000 out of this 9,50,000 is doubtful. Are you getting it? I'm combining both the scenarios now. Confirm loss and anticipated loss. What is the confirm loss that you're having is 1 lakh. 1 lakh is gone already. After getting this 1 lakh loss, now I have a thought that maybe I will not receive a 25,000 amount out of that 9 lakhs 50,000. So I created a provision and I kept there in the trial balance. Right? Come to your adjustments. Additional bad debt shall be provided at 50,000. So 1 lakh bad debts are already confirmed. At the time of preparation of trial balance, you had a doubt that you will not get 25. But what happened after that? Your anticipation was 25, but actual loss turns out to be 50, more than your anticipation. Right? Now, after getting so many shocks, 1 lakh is gone, anticipated 25, but loss turns out to be 50. Now, I want to maintain what we call this provision for doubtful debts at 5%. On what value will you calculate this 5%? Amount, sir. I can't put good debtors on calculator. 9 lakhs, right? See, 9 lakhs 50. Out of that, 50 is gone. And when did I get the confirmation? Is after trial balance is prepared. So, balance 9 lakhs, whatever you're calling them as good debtors. On this, I have a doubt now. What is the doubt? 5%, which comes to 45,000. Are you getting it? 25. Understand the connection between that 25 and this 50. We were thinking that maybe I will get a loss of another 25. But after I prepared trial balance, I got a double shock. What is a double shock is? I was thinking that I will not get 25, but I got a shock of 50. Now, after getting so many shocks, out of that 9 lakhs, now I have got a doubt that I may not get another 45. So, bad debts inside your trial balance, bad debts given in adjustments. Provision inside your trial balance, provision given as a adjustment. How do we treat this? Look at the thing. Technically, we are going with our +2 intermediate style. Old provision is how much? 25. Where is it sitting? It is there inside the trial balance. Bring it and write that in your P&L account on the credit side. Okay. Now, 25, I wrote it on the credit side. Bad debts. How much of bad debts are there? 2 bad debts, 1 lakh from trial balance, 50,000 from adjustments. Total 1,50,000. And now, after all this damage, you have another doubt that you may not get another 45 there. That is the new provision. Old provision is already utilized. Where did I utilize? I was thinking that I will not get 25, but eventually the loss turns out to be 50, double of what I was anticipating. Okay. Now, how do we write that in our balance sheet there? Trade receivables 9,50,000 taken from your trial balance minus adjustment bad debts 50,000 minus a new provision 45,000. What is your new anticipated losses? 45,000. Basic rule, adjustment items twice. We have adjusted that. What do we call this? We have shown that bad debts in our 50,000 additional bad debts, whatever are there. Did you write that twice? Yes. Additional bad debts are going into your profit and loss account. And again, we are deducting it from trade receivables, and then we are calculating a provision. Outer column, what is the debtors value that you are having? 8 lakhs 55,000. Now, these are called as good debtors. Why? Because when you are already having a doubt that you may not get the money, even those debtors are not good debtors. 8,55,000 are good debtors. Now, imagine, like, with this profit and loss account, you went to a bank and you have applied for a loan. Pink part, highlighted part, you prepared your profit and loss account like this, and you went to bank and you have applied for a loan. Do you think you will get loan from that bank? Bank will reject your loan application immediately. Why? You are giving him a entire picture. Imagine, like, the manager is looking at this profit and loss account. He will tell you the story from that profit and loss account. What is the story? You got a confirmed loss of 1 lakh before trial balance. After losing this 1 lakh, you are anticipating that you will get another loss of 25,000. And eventually you were thinking that you will get 25,000, but the loss turns out to be 50,000. And now you are again anticipating a 45,000 loss in future. So if you write so much bad in your P&L account, your loan will get rejected. Bank manager will say, sir, I don't want to write your loan account as bad debt in my books of accounts, and I can't give you loan. What is the solution? So did you get the clarity, sir? You think this P&L account looks, sir, we are going with rules. Now, if you go with rules, it is well and good, fine. But the thing is, like, will you get any loan with this kind of P&L account? No way that no bank in India will give you even a single rupee loan if they see profit and loss account like this. So what is the idea here? I don't want to show all these numbers. How many numbers are there? Total 5 numbers are there in my P&L account now. What are the numbers? 25,000 on the credit side, 1 lakh plus 50,000, 1 lakh 50,000 on the other side, 45,000 here. I want to hide all of them and write only one amount there. Can I hide all of them and write only one number? So 25,000 is already utilized, sir. And what am I asking you is a level question, sir, which we discuss only at CMS. We don't do that. Other institutes, they don't do that actually. Because this level, whatever we are discussing now, it's not meant for foundation level students, but you should understand that because within no time, you guys will be getting into inter. Okay. Whatever 25,000 that you are referring, it is already utilized somewhere. Where did I use it? You see this, let's remove the color. You see that 25,000 there? 50,000 here? What is the connection between that 25,000 and this 50,000 is? You were anticipating that you will get a loss of 25. Already you have 1 lakh loss there. After seeing that loss, you were thinking that maybe I will not get 25. But eventually what happened later? So the 25 is already absorbed. Where is it absorbed? 50. That's why I'm writing it there and writing it here. Got the clarity? Now the question is, it is not what we are dealing with. What is my point is, first thing is, if you go and apply for a loan with this kind of P&L account, they will not give you loan. Why? Manager will say, sir, you are very good at selling goods on credit, but you are not good at collecting the money from your customers. That's what this thing is showing, right? So what do I do? Same scenario, okay? Trial balance, numbers are the same, or do you see any change in the numbers? Same numbers. Trade receivables 9,50,000, bad debts 1 lakh confirmed already before preparing trial balance. We had a doubt that we will get an additional 25. Additional bad debts turns out to be 50, and now you are having anticipation of another 5%. 9 lakhs into 5%, 45. Instead of writing all that stuff in P&L account, I will close everything in an account called as provision for doubtful debts account, which is already created by you and is sitting in your trial balance with a balance of 25,000 there. You see provision account already sitting in your trial balance, right? So what do? I will open that account, the same account, whatever account number 3 is there in your trial balance, I will open that account. Already it has opening balance, right? What is the opening balance that is there? 25,000. Where do I write it? By balance brought down, I will write as 25,000 opening balance. From where did I take it? Old provision, trial balance. Instead of closing this bad debts and additional bad debts in P&L account, I will close that bad debts and additional bad debts in my provision account. Which means that don't write that bad debts 1 lakh and additional bad debts 50,000 in your P&L account. Write it in your provision for doubtful debts account. So what is the meaning that we are bringing here is, I was anticipating 25,000 loss, but the loss turns out to be 1 lakh 50,000, and now I have another additional doubt that I may not get 45,000. Opening balance 25,000, closing balance 45,000. So if the opening balance is there on the credit side, I'll have closing balance on the debit side. Now balance this account. Total on the debit side is 150 plus 45, 195, minus 25. P&L account 1,70,000. I will write the difference amount in my profit and loss account. What is that we are showing in P&L account is only to provision for doubtful debts 1,70,000. Now, which P&L account is better? P&L account like this or P&L account like this? Here we are not writing all those 5 amounts. Credit side 25,000, debit side 1 lakh, 50, 150, 45. We are not writing all that. We are writing it as only provision for doubtful debts. If someone sees this, what is that they will think is, they will think that this business is having a doubt that they will not get 1,70,000, because what is the name of the account there? It is provision for doubtful debts. Got the clarity? So this is the way. Obviously, no matter whatever you write, if you go to balance sheet, what is it you're showing in your balance sheet? 9,50,000 minus additional bad debts 50,000 minus new provision 45,000. Even this thing will hide it. We will not show it in balance sheet. All this calculation will only write trade receivables 8,55,000 in the outer column. I'll write the reference, right? Go and refer note number 1 or 2 or 3 somewhere. So did you get the clarity? So showing it is, this particular thing is, it is not wrong, but it is not a proper or a appropriate way of showing it. Instead of showing your P&L account like this, we will write only one number in P&L account, writing it as provision for doubtful debts. From where did I bring it? From my provision account balance on the credit side. What is the entry? Profit and loss account debit to provision for doubtful debts. What is the entry that we have posted here? This one. P&L is on the credit, so entry will be profit and loss account debit to provision for doubtful debts. Bring that and write it in your P&L account on the debit side. This is the proper way of disclosing your bad debts and provision for doubtful debts. Am I being clear with this? Right. Similarly, now everything is over. What are the possible things that we have seen? We have seen bad debts at both the places. What are the places? Trial balance and adjustments. We have seen something called as provision for doubtful debts at both the places. What are they? Trial balance and adjustments. And we came to a conclusion like this is the confirm amount, right? And we are calling them as what? We are calling them as good debtors. But now one more problem will start. 8 lakh 50, from where did you start? 9 lakhs 50,000 to 8 lakh 55,000. Almost 95,000 is gone there. Are you sure that you will get 8 lakh 55,000? Sir, what is this, sir? Just now you told us so many things. We have seen 6 scenarios plus 2 additional scenarios plus 1 consolidating scenario. And now you are saying that is it confirmed as no. Now when you are calling them as good debtors, being a good debtor will also give me loss in the form of discount allowed. All this time we were looking at the bad customers now, and then you have decided that 8 lakh 55,000 value of customers are all good customers, but even good customers will give you loss. And what is that loss is called as discount allowed. This guy, you gave him 30 days time. Okay, I think we have discussed about what do we call as cash discounts and trade discounts, right? Old students, they'll have a clarity. What was trade discount and what was cash discount? And I think I've discussed allowance and rebate also. What is this trade discount and what is cash discount? Quantity based discount. The more you buy, the more discount you get. The less you buy, the less discount you get. What is the other one? Cash discount. You are given 30 days time and I gave you an offer. What is that offer is? If you pay immediately or within 10 days, I'll give you what we call as 10% cash discount. If you are paying me from 11th day to 20th day, I'll give you 5% cash discount. And if you are making payment from 21st day to 25th day, I'll give you only 2% cash discount. So the more time you take, the less discount you get. The less time you take, the more discount you can enjoy. Right? So this 8,55,000 is fine. But now there is a new problem. What is a new problem is, out of that 8,55,000, I am anticipating that I may have to give some discount to my customers who will make the payment before the scheduled due date. Okay, let's see the next problem. What is the next problem? Provision for discount on debtors here. Trade receivables are how much? 10 lakhs there. Okay, that when I converted that in I love PDF, I don't know why is it taking like million thing like American style. I've kept the comma after 10, after first zero, but still it is moving to the. So 10 lakhs here. Provision for discount on debtors is 15. So what is the meaning of this 15,000 is? If you are clear with bad debts concept and provision for doubtful debts concept, you already know this concept. What is this 15,000? Discount allowed. Discount allowed. Anticipation that you may give 15,000 rupees as discount to the good customers. Correct? Now look at the thing. No information regarding provision for doubtfulness is copied here. Discount here. This is wrong. Provision for discount adjustments, nothing is given in your adjustments. What is that we will do? If provision appears only in trial balance, it means that the business was expecting that the loss due to discount in near future. If provision has been created in the middle of the financial year, then profit and loss suspense account has to be used for creating provision for discount on debtors. As the same note what we wrote in our previous one. P&L suspense account concept is not covered in your syllabus. If it was there in your syllabus, I would have discussed it. Okay, for foundation it is not there, it is there in interlevel. What is it I am writing? P&L suspense account 15,000. Acha, this thing came into it. See my into one. Right. By provision for doubtful debts, what is it I'm writing? Credit side. The same thing what you have done in your provision for doubtful debts when it was given in your trial balance. 25,000 you wrote it in P&L account credit side, right? Why? Because I don't have any doubt now. I'm sure that the customer will not, or already the time is over and I don't have to give that discount to my customer. First scenario is clear. It will be identical to your provision for doubtful debts because both of them are losses only. Okay. Now, discount, provision for discount is given in your adjustments. How much percentage is it? 2%. On what amount? It comes to how much? 20,000. So I have to create a provision now, and you are creating provision after trial balance to provision for discount on debtors 20,000, and since it is given in the adjustments I will write it in P&L account debit side, and again I will show it in my balance sheet as a deduction. 10 lakhs minus 20,000, 9 lakhs 80,000. Next, provision is there inside your trial balance and given as adjustment, but what is the difference that you see? Do you see any difference there? Compare these two amounts. Opening provision is less than your new provision. Where do we write that? Simple. Take it to your P&L account. Old provision on the credit side, new provision on the debit side. Trade receivables 30,000, 9 lakhs 20,000. Okay. Now take out your books, write this down, or it will be there on display. I'll leave it on display. You have to solve it now. Okay. If you are clear with all the 11 scenarios that we have discussed till now, you should be able to complete this. Let's discuss it first. Trade receivables are given. Bad debts are there inside your trial balance. Bad debts are there in your adjustments. Provision, discount allowed is there in your trial balance. Discount allowed is there in your adjustments there. Okay, additional discount. Okay, provision and provision. Now, what is that I'm expecting from you is you have to prepare these four things. Provision for doubtful debts account, provision for discount on debtors account, profit and loss account for the above period, that is disclosing this balance, and balance sheet with the above accounts there. 10 minutes time, don't discuss. Okay, if you can't do it without discussing, then don't do. Sit idle, don't talk. Do your own thing. Let's see your clarity, whether you have got the concept or not. Draw two accounts. What are the two accounts? Provision for doubtful debt account, provision for, first of all, do one thing or else write this question, keep this question with you. Soft copy will be shared to you anyhow, but because when you have it in your book, it will be different. Okay, or else if you can solve it directly from the projection, you can do that. Choice is yours. If you can handle this, you can handle any adjustments on bad debts, provision for doubtful debts, and provision for discount on debtors. తొందర ఏం లేదు, టైం తీసుకోండి. బట్ once you can solve this on your own, you guys are like okay with all three adjustments. This is the only complex adjustment that you have in your syllabus. Rest of them are all very simple. That is the reason. Usually, the sole proprietary business and partnership businesses, they are not done by people who are, MBA background people or CA, CMA background people will not be there. Most of them, they don't know how to handle a business in a professional way. Okay, I'll give you an example. I have a client in what do we call as the GDMetla Chintal industrial area is there. GDMetla industrial area is there. I have a client. Now, what is that this guy does is he used to work in a what do we call as company called as Tata Voltas, a company which makes what do we call this electronic items. This Voltas is famous for what do we call this high frequency fridges. You know this fridges will be there, not our household fridges. You will be having commercial fridges, right? Ice creams and other things will be kept with glass sliders and all that. So he used to work in that particular what do we call as plant of Voltas as a what do we call as a worker there. He used to make those refrigerators and all that. So one day, you'll find this grills inside. White color plastic coated grills will be there. Even your fridges, you will have a metal grill with rubber coating on that. If you touch them, it will be like you'll get a feel of a rubber. So he got the expertise of how to make that particular what do we call as grills somehow. So what he did is he resigned from Voltas. He has set up his own factory in what do we call as GD Metal Industrial Area. And what is that he's doing is he's supplying these what do we call as rubber coated grills to all the refrigerating companies and all the what do we call as companies which are using that particular grill. It will be used in ACs also inside. Okay. So he started that plant. Problem is this guy never completed any formal what do we call as education as far as management is concerned. He's a polytechnic guy. Electronics or what do we call this polytechnic electronic thing. After that, he got into job. He knows electronics well and inside out. Now the problem is he has got 11 companies which are purchasing this particular grills from him. They won't make them, they will buy them. They will give an order, this guy will make it and he will deliver and they will put them in their fridges as a racks there. Now, problem is he doesn't know how to handle GST. He doesn't know how to do the marketing. He knows only one thing, how to manufacture that and to whom to sell. Now the problem is for 5 years his business was neither improving or it was not going out. It was like break even state, constant. Then suddenly someone told him that you should find someone who is very good at marketing, MBA marketing people, or you appoint a person as general manager and you give him the responsibility of developing the business. Okay, obviously general manager will do what we call as his work. Why will he do the additional work of developing the business, improving sales, go to customers, convince them and all that? So in order to what do we call this encourage him, what is that this person has done is he said that I'll give you salary of 1 lakh per month. 12 lakhs is your annual salary. And every year, once we calculate net profit, on that net profit, I'll give you a percentage as commission. Now, do you think the general manager will take the initiative and do the hard work and develop the business? Obviously, because you are giving him not just salary, you're also giving him additional, you can call it as perk or incentive. Now, that incentive is calculated on net profit. Okay. And what is the calculation? Look at the first one. Net profit in profit and loss account. What is net profit is, you didn't write it as net profit, you just calculate the difference. Credit side minus debit side, you got the difference as what? 10 lakhs there. 10 lakhs into what is the wording that is used? General manager is entitled to a commission of, second line, focus on the second line, is entitled to a commission of 10% after such commission. So when the wording is used as after, you have to calculate it as 10 lakhs into 10 by 110. What is the meaning of the word after is, whatever 10 lakhs difference that you have got between credit side minus debit side, that amount is two things. Your net profit and manager's commission are together. Split them. And what is it I'm doing for splitting? 10 lakhs into 10 by 110. What is the amount that you are getting? 90,909 rupees. Okay, or we'll round off to 90,900, or I'll make it 91,000 practically. But here strictly we are going with numbers, because you guys will say that, sir, calculations are not matching. That's why I wrote the literal number that is there. So 90,909, where do I write it? To general manager's commission. Did you pay this amount? We calculated the amount just now. When will you pay it? So in P&L account on the debit side, to general manager's commission 90,909, and what will be my balance net profit? It will be 9,09,091. Why? 10 lakhs minus 90,909. The balance amount belongs to the owner. Okay, and did we pay the amount? No, sir, we calculated it just now. So that's why outstanding general man's commission 90,909 in your balance sheet on the liability side. Now, if the same thing is given and the word used is before, it is a very simple calculation, 10 lakhs into 10 by 100. What is the difference in calculation is, if the word is after, it is 10 by 110. If the word is used as a before, it is 10 by 100, regular percentage. Before is always regular. So now, what is the value that you are getting? 1 lakh. Same entries. To general manager's commission, 1 lakh. To net profit, 9 lakhs. We never paid it, so I'll be writing it as outstanding general manager's commission in my, what do we call as, liabilities side. Got the clarity? So these are your regular adjustments, except for one adjustment is left out, which is your sale of goods on approval or return spending. That I will add it off to this particular thing. It's already ready. I'm working on that Excel. Once it is ready, we will take care of it. So these are the maximum possible adjustments that you have in your foundation syllabus. And once you are thorough with this particular, another 6 slides or 7 slides will be added, approximately 50 pages, 25 sheets. If you can thoroughly understand all of them, I have not left anything anywhere. Everything is covered. Not even a single adjustment is left anywhere, including some adjustments which will not be asked for your level. Even hidden adjustments are not there. Sometimes they may ask. If they want to make the paper tough, they'll put a surprise like hidden adjustment and all that. Okay, right. So we'll continue tomorrow